Good morning. It's Harvey Jackson from Producer Profit. I'm just going to go through just some headlines here. There's some shifts in supply chains. The tariff talk or duty talk. It keeps on happening every day here. Markets are under pressure. Um, so gold hits $3,000 an ounce, and that's a safe haven. Uh, People are going away from the all-powerful U.S. dollar and putting it into gold. Just hey, you're going to be safe there rather than with the all-powerful U.S. dollar. Um, Here's just some prices. I was talking or showed this yesterday. You can see just how some prices have changed in this last year. And what's interesting on this other chart is uh, just showing the S&P corrections, and it happens often. But uh, what is to note is just how this has increased over time. How that curve is just keeps on going up. But a 5% pullback is pretty substantial. So there's some conflicting information here. Heavy rains in Argentina nourish soybean crop, and then exchange trims soybean forecast, right? Um, so it's at 46 here and then 49 here, but they are getting some rain. Is it going to be at the right time? That's all to kind of debate. Conab did come up with their numbers as well, which points to the one that's probably the biggest one to point out is 167. It went up from last month, and corn production is still basically the same or expected to be about the same. And this is what I was kind of reiterating where the trade is shifting. So you can see Trump trade wars favor Brazil, uh, trade quarrels boost China and Russia, agricultural trade. We're going to see more and more headlines like this, and this is just in the same, almost it's the same day, and different writers are talking about it. I've been talking about it for a while, but it's just getting emphasized here more. And this is maybe another scenario here. This is talking about the rapeseed meal shortage. I do believe that it is somewhat of a big deal. Did they buy enough meal, or do they have enough oil or seed supplies that they can crush it themselves? And I think that might be the part of the factor. But I think the other part is this is the price of meal over the last number of years, and we're at the bottom end of that range rather than the top end of that range on soy meal. So if there's other protein sources out there, there is alternatives and maybe even better alternatives than soy meal or canola meal. I mean, uh, China access to hundreds of U.S. meat exporters in doubt. So the Trump 1.0 deal is not. Well, what has to happen is, or what does happen, exporters have to be registered, and China's not talking to the U.S. administration about getting these importers registered on the beef side. So this is a beef story, and it could be pretty impactful for the amount of beef that they do buy. You know, it's still $2.5 billion, but look at who the other partners are. He's still China's not fighting with them, so um, they will probably just go around U.S. Drought Monitor came out yesterday. You can see here uh, drought in corn and soybeans went down. I guess the other most notable one that I'm going to highlight here is your winter wheat actually went up. So here's your corn area, 55% production is within drought area. It was 60 last week. So just as FYI, there's been some rains in some of the corn growing area. Same thing in the soybean area. But when you look at the winter wheat area, it grew. And if you push a little bit more drought into that area, that's substantial because that's where majority of the red winter wheat is grown. And we're going to be breaking, and we are breaking dormancy here. So we'll probably start to get a little bit more attention paid to that. Let's just have a look at the markets. Canola is up. Rapeseed is down. Soy oil is slightly up. Palm oil is up a little wee bit, but down over the week. Crude oil is up. Soybeans 1.5 cents down, and the wheats are a couple cents to 3 cents down, and the Canadian dollar is basically flat there as well. So let's just dive into it here. This is not a good looking chart. This is not a buy yet until you see probably a couple of days of green here, but there's still some more downside risk here in canola just by looking at the chart. And it kind of shows up even more in new crop, and yet it stopped here. But you can see that there's on new crop there's let's just 540 down to, or yeah, 592 down to 570. So you can lose another $20. And if we lose $20 there, you could probably lose about 30 or $40 on the other contract on the front one. Price of the rapeseed is $165 more expensive than Canadian canola, and it's dropped off like a cliff there as well. Here's your soybean oil, same trend. it's still got a little ways to go to get your full retracement. And your palm oil is the one that's kind of holding up. It's still holding up in the higher end of the range here. And if you look at your West Texas crude oil, it's getting closer to the bottom end of the range. So that's probably good for fuel prices, but there's a whole pile of other things that's going wrong. Soybeans, middle of the range here, but still a downward trend. Soybean meal is kind of in the middle of this trend here. And if Canadian dollar here we're looking at a minute chart. So if you were to just take some of the top off here and bottom, you'd be in the middle of the range. You can see it here more clearly, but maybe towards the bottom of that range, even of that channel going sideways. If you take the extreme tops and bottoms off. The only somewhat of a good story, even though it's down today slightly, is your wheat. It looks like we've got a little bit of or good size recovery here. Same thing on the new crop. Still looking for targets at those higher values. There's been some basis talk or some talk about better posted basis levels on the front months for delivery, and there's been a little bit of activity there. There's still some more activity or more action that can be happening there, especially knowing how the rail companies have been acting for the last few years. They've been overcharging for the first 3 quarters of the year, and then the last quarter they give pretty good discounts so that they don't hit their revenue cap. But majority of the grain is moved in the first 3 quarters, and then the last quarter they're giving a lot of that back, and the basis levels improve just when the demand starts to pick up here as well. So basis could improve just for that reason all by itself. Is the rail caps um, uh, or rail revenue caps are giving some money back at basically start of May. So that's when the basis will improve or does improve. But we also have that better bid situation happening on the in moving east here in Manitoba and eastern Saskatchewan. So if we have a look, yeah, just flipping through here, same kind of trend on all the wheats here basically. Um, yeah, nice even in the Chicago wheat here. Here's your corn. Had a little pull up and then a little bit of a pullback. Definitely would like to put some stops below any corn positions here. Stops, not buying base or not buying puts here. I'll be just putting out full stops, and that way we can get back in here if we need to. And we'll chat later. Have a good weekend.